Hello everyone. A very warm greetings from Team Mamta Binani and Associates to all of you. Our speaker for today's webinar is first speaker, I would rather say, for today's webinar is Mr. Mohammed Saif. He is very young, energetic, lively, very enthusiastic, and he has a very vast practical experience on this subject. So he will be elaborating the pros and cons and will be taking us through the procedural aspect that how the scheme of amalgamation and merger should be implemented at NCLT level. So without wasting a single second now, I would now request Mohammed Saif to kindly start this session.
Hello everyone. Thank you so much, ma'am, for such a nice introduction and giving me the opportunity to share my knowledge and experience regarding merger. So, in the recent past time, we all heard the merger of some significant merger regarding Idea and Vodafone, which will be merged and become VI. Then Bank of Baroda, Dina Bank or Vijaya Bank merge and become Bank of Baroda Vijaya Dina Bank. And Syndicate Bank merge with Canara Bank. So let's discuss what is merger, the concept of merger, pros and cons of merger, types of merger, method of accounting for merger and acquisition, and process of merger and amalgamation, and then question answer session. So we are going to discuss the following concept. First is merger, then amalgamation, arrangement, demerger, acquisition, and slum sale. Merger. Merger is a process wherein two separate businesses combine into a single legal entity. The shareholder of the transferor company will receive share in the merged company in exchange of the share held by them in the transferor company as per the agreed exchange ratio ascertained by the registered valuer. So here is a company A and B which is merged together and become B. The next concept is amalgamation. An amalgamation is a combination of two or more companies into a new entity. Amalgamation is distinct from merger. Neither company involved survive as a legal entity. Instead, a complete new entity is formed to house the combined assets and liability of both the companies. Here is the example. Company A and B amalgamate and become a new company, that is company C. The next concept is arrangement. An arrangement includes a reorganization of the company's share capital by the consolidation of share of different classes or by the division of share into shares of different classes or by both the methods. All modes of reorganizing the share capital include interference with the preferential and other special right attached to the share. So here is the example. Suppose there is a company with transferor company A and transferor company B. Merge with transferee company, that is C. Then the A and B existing will be vanished and only the transferee company will exist. Then the transferee company will again demerge into company resulting company C and X. That means the company C break into two separate companies, that is C and X. Then arrangement also includes merger plus demerger in one single scheme, and merger plus capital reduction, merger plus demerger plus capital reduction, conversion of equity into preference. The next topic is demerger. A demerger is a corporate restructuring in which a business is broken into components, neither to operate their own or to be sold or to be liquidated as a divestiture. So here is an example. There is a company A. Wait a minute. There is a company A which has two divisions, Division A 1 and Division 2. And the company wants to break the division and become a separate company. So the company decided to demerge and division 2 make become a resulting company B. And in such a case, the shareholder of the company A will get the share in company B, that is the resulting company. The next concept is acquisition. An acquisition is when one company purchases most or all of any another company's share to gain control of that company. Purchasing more than 50% of targeted firm's stock and other assets allow the acquirer to make decisions about the newly acquired assets without the approval of the company's other shareholders. For example, Flipkart in the recent past time acquired the following company, for example, PhonePe, Myntra, eBay, and etc. We often used to hear that big fishes in the ocean will eat the small fishes. Just like in this competitive market, the companies do the same. Then the slum sale. As per Section 2, Clause 42C of the Income Tax Act, slum sale means the transfer of one or more undertaking as a result of sale for a lump sum consideration without values being assigned to the individual assets and liability in such sale. Here is a company which is to be sold to some other person or company, and in return the lump sum amount will be paid by the purchasing company. The next topic is pros of merger and amalgamation, which will be discussed by my co-speaker Surabhi. Over to you, Surabhi.
Thank you, sir. Thank you for the introduction. I hope you guys are enjoying our session. So let us now talk about pros of merger and amalgamations. Increases in market share. When company merge, the new company gains a larger share and market share and gets ahead in the competition. Tax purposes, if a company generates a significant taxable income, it can merge with a company with substantial carry-forward tax losses. After a merger, the total tax liability of the consolidated company will be much lower than the tax liability of the independent company. Expand businesses into new geographical areas. A company seeking to expand its business in a certain geographical area may merge with another similar company operating in the same area to get the business started. Prevents closure of an unprofitable business. Merger can save a company from going bankrupt and also save many jobs. If a firm has been badly managed, it could find itself going out of business. A merger or a takeover may be a way for the firm to survive and many jobs to be saved. And the last pro is that it reduces the cost of operations. Company can achieve economics of scale such as bulk buying of raw materials, which can result in cost reductions. The investments on asset are now spread over out over a large output, which leads to technical economies. The cons of merger and amalgamation. 1. It raises prices of the product or services. A merger results in a reduced competition in a market and a larger market share. Thus, the new company can gain a monopoly and increase the prices of its product or services. Prevents economies of scale. In case where there is a little in common between the companies, it may be difficult to gain synergies. Also, a bigger company may find it unable to motivate their employees and achieve the same degree of control. Thus, a new company may not be able to achieve economies of scale as before. Creates unemployment. In an aggressive merger, a company may opt to eliminate the underperforming assets of the other company. It may result in employees losing their jobs. Creates gaps in communication. The companies that have agreed to merge may have different cultures. It may result in a gap in communication and affect the performance of the employees. The next topic is types of merger. There are various types of merger. First, co-generic merger. Second, vertical merger. Third, horizontal merger. Fourth, conglomerate merger. And fifth, reverse merger. Let us get into detail. Co-generic merger. A co-generic merger is a merger between two or more businesses which are related to each other in terms of customer groups, functions, or technology. Example, combination of a computer system manufacturer with a UPS manufacturer. You can see in the example, company A featuring product A and company 2 featuring product B merge into a new combined company which produces both the product. Second type, vertical merger. A vertical merger is a kind of merger in which two or more companies in the same industry but in different fields combine together in business. In this example, we can see that the cotton supplier merged with the textile manufacturer to merge into a new company. Horizontal merger. Horizontal merger is a kind of merger in which two or more companies engage in the same industry and same field combine together in a business. Example, Volkswagen and Porsche. Both occupy automobile space, merge to cut costs and share engineering. Conglomerate merger. Conglomerate merger is a kind of merger in which two or more companies engaged in the different kind of industries combined together in business. As per our example, let's suppose Facebook wants to enter in a food delivery business. Then it can either combine itself, merge itself with Zomato or Swiggy. The last merger is reverse merger. In this merger, a reverse merger is a merger in which a private company becomes a public company by acquiring it. It saves a private company from the complicated process and expensive compliance of becoming a public company. Instead, it acquires a public company as an investment and converts itself into a public company. Or when a sound financial company is merged with a loss-making company. In this example, we are looking at that private company is buying a public company and becoming a new public company. Methods, our next topic is methods of accounting for merger and acquisition. There are two methods, pooling of interest method and purchase method. Methods of accounting for merger. Pooling of interest method. Pooling of interest method of accounting is a method in which the assets, liabilities, and reserve are combined and shown at their historical values in the books of the transferee company as of the date of merger or amalgamation. All the assets and liabilities of the companies undergoing a merger are aggregated. Difference in the amount of consideration and share capital is adjusted with the reserves. The identity of the transferor company is kept intact. Purchase method. It is a method for acquisition. Purchase method is an accounting method where the assets and liabilities of the transferor company are shown at their market value in the books of the transferee company as of the date of acquisition. Only those assets and liabilities are recorded in the books of transferee company which are taken over by it. Surplus or deficit of purchase consideration over the net assets required should be either credited or debited as capital reserves or goodwill. The next topic is process of merger, which will be discussed by my co-speaker, Saif.
Thank you, Surabhi. Our next topic is process of merger. I concise the whole process of merger into 12 simple steps. The first is documents and information received from client, then preparation of application, filing of application to NCLT, hearing, first order compliances, then preparation of petition, filing of the petition to NCLT, then hearing, then second order compliances, obtain report from statutory authorities, then again hearing, and at last post-merger compliances. Now let's discuss each one by one in detail. Documents and information received from client. So here is our client and this is our office, Mamta Binani and Associate. And this is the document which we required for preparation of the application. So here is our document comes and the documents includes MOA, AOA of the companies, financial statements of all the companies which are going to be proposed to be in merger, latest list of shareholders, latest list of creditors, auditor certificates, PAN cards, valuation report, and such other details which are necessary for the purpose of preparation of application. The step 2 is preparation of application. So here is our form and this is how we prepare the applications. The application includes cost title, notice of admission in form NCLT2, list of dates and events, synopsis, application in form NCLT1, affidavit verifying application in form 6. Then we have to annex some annexures like MOA, AOA of the companies, financial statements, scheme of amalgamation, board resolution, PAN card of all the companies, valuation report, determine valuation report by a registered valuer, list of shareholder along with the auditor certificates confirming the said list. Then list of creditor along with auditor certificates. Then auditor certificate regarding accounting treatment as per section 133 of the Companies Act. Then consent affidavit from shareholder and creditor. If the company has a less number of shareholder and creditor, then we can obtain the affidavit, consent from them by way of affidavit. Otherwise, the company needs to conduct a meeting to obtain the consent from them. Then memorandum of appearance, which is submitted by the authorized representative of the applicant company who is going to appear before NCLT. The next step is filing of application to the Honorable NCLT. So here is our form. First, we need to electronically file our application through NCLT portal. Then NCLT will review the application, and if all the compliances are complied and our application is as per the NCLT format, our application get scrutiny free. and listing number will be allotted to our application. Then we have to physically file the application to NCLT. Then we get the listing hearing date. The next step is hearing in NCLT. The authorized representative of the applicant company will appear before the NCLT and discuss the matter, and if NCLT deems fits, it may pass the following order. The first is if the consent of the shareholder and creditor for approval of the scheme of merger have already been obtained, then the NCLT will pass, dispense the meeting of the shareholder and creditor, and order to send the notice of application to statutory authorities for inviting their representation or any query. Then we have to file affidavit in compliance of said order. And if the consent of the shareholder and creditor for approval of the scheme have not been obtained, then the NCLT will pass the following order. Advertisement of notice for conducting general meeting or meeting of creditor as the case may be. Then sending the notice to the all statutory authorities conducting the meeting. Then affidavit in compliance of said order. Then we have to do the first order compliances. So here is our form. We have to serve the notice to all statutory authority. The statutory authorities include ROC, RD, which is regional director, then income tax, CCIT, Chief Commissioner of Income Tax, OL, that is official liquidator, and such other authorities which is related to the company. For example, if the company is a NBFC company, we need to serve the application to RBI, and if it is a listed company, we need to serve it to SEBI. Then we have to make the affidavit that we are complied with the order. The affidavit first filed through NCLT e-filing portal. Then we have to submit the physical copy to the NCLT. Kindly note that all the physical filing are done in 1+1 basis. That means we have to submit the original copy along with the one photocopy of the same. In case, it also depends on the different benches. For example, in some benches, we required to file original copy plus 2 Xerox copy. The next is preparation of petition. And this is how we prepare the petition. The petition includes the following. All the documents are almost same as application. There is a slightly difference that we have to add the first motion order, an affidavit in compliance of order, and the affidavit from the shareholder and creditor, that is a consent affidavit, we not required to annex in the petition. And you may think that what is the difference between application and petition? Then I would like to tell you that in application, we sought the interim relief, that is dispense the meeting of shareholder and creditor, pass the order for sending the notice to stats authorities. And in petition, we sought for the final relief, that is sanctioning the scheme of merger or amalgamation. Step 7 is filing of petition to NCLT. Just like we file application, there is the same step. First, we have to e-file through NCLT portal. Then it will get scrutiny free. and listing number will be allotted to our application. Then we have to submit the hard copy of the petition to NCLT. The next is hearing in NCLT. The authorized representative of the applicant company will again appear before the tribunal and brief about the application petition. Then NCLT may pass the order for publication of newspaper advertisement into newspaper, that is English newspaper and regional newspaper. Then sending notice to staff authorities again. Then affidavit in compliance of order. The next step is second order compliances. The company, or we can say that us, have to send notice which is in form CAA 3 to ROC, RD, IT, CCIT, OL, or any other statutory authority. And in second order compliances, there is one extra compliance, right, that is newspaper advertisement. We have to publish the notice in two newspaper, that is English and regional language. Then we have to serve the affidavit in compliance of order through NCLT portal first, then physical filing. The next step is obtain report from a statutory authority, or we can say that obtain non-objection certificate NOC from statutory authorities. In the last step, we serve the notice of petition to all statutory authority. And if any statutory authority, for example, regional director, have any query regarding the scheme or petition, or they may sought for some information, then RD will send us some query, which is known as RD query in general. Then we have to prepare the application and send it to the RD. Sorry, we have to prepare the RD reply and submit to RD. RD will give their observation to NCLT and along with the one photocopy of the same to authorized representative of the applicant company or either company. Then we have to file the reply of RD observation, that is this, which is known as rejoinder. We have to file the rejoinder in reply of the RD observation. Then if we have to obtain the report from official liquidator also. If official liquidator has some query, they will send us. We will prepare the reply and submit to the official liquidator. And if official liquidator is satisfied with our reply, they will send the OL report to NCLT along with one copy to the applicant company or authorized representative. And if there is any other statutory authority who have any query, for example, income tax or RBI, they may send us and we will have to give the reply in due course. The next step is hearing in NCLT. The authorized representative will again appear in NCLT. This hearing may goes 2-3 times also. Then the authorized representative will tell the judges that they obtain the non-objection certificates from a statutory authority or report, and all the compliances, first order and second order compliances are already been made. Then NCLT will pass the order for sanctioning the scheme of amalgamation. Yep. The last step is post-merger compliances. Post-merger compliances includes, first, we have to apply to NCLT for certified true copy of order. NCLT will give us the certified true copy of order. Then we have to submit Form INC 28 within 30 days of obtaining of certified true copy of order. It is for the purpose of informing registrar of companies that the schemes of amalgamation have been approved by the NCLT. Then the company, we have to write a letter to ROC for clubbing the authorized capital of the transferor company into transferee company. That means if there is a two transferor company and each has 10 lakhs authorized capital, then both companies' authorized capital, that is 20 lakhs, will be merged in transferee company, and transferee company authorized capital will automatically increase. And for the purpose of allotment, if the authorized capital of the transferee company is not sufficient, we have to file Form SH7 to increase the authorized capital of transferee company. Then the transferee company will have to make some accounting treatment in the books of accounts. And the last step is filing of Form Pass 3, which is for allotment of shares to MCA, that is ROC, Registrar of Company. That means the registrar, the shareholder of transferor company will get share in the transferee company as specified in the valuation report, that is as per the swap ratio. Thank you. The next and the last one is food for thought, that is Q&A. We collect some general query regarding merger, which one may have. Let's discuss it one by one. The first is there any criteria for merger? So my co-speaker, Surabhi, will answer this query. Surabhi.
Yes, there is no, actually, there is no prescribed criteria for any merger. It depends on the companies. If they decide which company to take for the merger.
Okay, thank you. The next is there any taxation benefit of merger?
Yes, there is a tax benefit of merger. The transfer asset from the transferor company to the transferee company will not be considered as capital gain in the books of transferee company.
Thank you. The next is, does merger take long time to complete?
The processing time for merger is actually takes time, but the consumption can be little higher in case then where is one or more regulatory is involved. Like when it's listed, the SEBI is involved, we have to take NOC from SEBI also, and so on.
Yes, of course. Are foreign companies allowed to merge with Indian companies?
Yes, foreign companies are allowed to merge with Indian companies, and as per section 234 of the Companies Act 2013, it is already specified that the process of merger is mutandis mutandis under a company.
Okay, thank you. Is valuation of share of both the companies is mandatory?
Yes, the valuation of shares of both the companies is mandatory for determining the swap ratio for exchanging the equity in the transferee company for the shareholders of the transferor company.
Thank you. What is the appointed date?
Appointed date can be any date as specified in the scheme, and as per the circular dated 21st August 2019, of MCA appointed that can be either specified in the scheme or it can be a date that is approved by the NCLT.
Okay. Thank you so much, everybody. If there is any question, then we open the chat box, or you can also speak.
Hello. Hello, am I audible?
Yes,
Yes,
sir,
sir.
you are audible, sir.
So I have a query that after the second merger order, second motion order, the authorized capital of both the companies will be merged in the transferee company. So the memorandum of association of the transferee company shall get altered. So how do we get that registered with the altered MOA with the ROC so that it reflects in the public documents?
Sir, we need to write a letter for clubbing of authorized capital of transferor company into transferee company to our register of companies, and then we have to follow up with them. They will club the authorized capital, and it will, if it is approved, it will automatically appear on the master data of the transferee company.
No, Saifji, my query is that is okay. My authorized capital got clubbed and it is reflecting in the master data. But the memorandum of association of the transferee company also gets altered because clause 5 will get altered. The subscribed
Yes,
capital clause. Now, the altered MOA is not registered with the ROC, na? Because whenever any stakeholder wants to get the updated memorandum of a company, it should be available in the view public documents. And that is reflected when the company does filing through the MCA portal.
Sir, you can file the same in e-form MGT 14, or else there is one more alternative available with you. What you can do is at the time of allotment of shares, when you file pass 3, in that e-form also, sir, you can file the amended MOA so that it gets registered with the MCA also, and it will be available on the public domain too for the stakeholders. These two alternatives are available with you, Kushalji.
Okay, thank you.
Thank you. Does anyone else has any query? Because Saif and Surabhi has already answered all the queries. They have prepared FAQs and answered all the relevant queries, which I think that were cropping up in everyone's mind. So if anyone else has any query, they can just post the same in chat box, or they can ask personally also.
Hello, are you getting?
Yes, 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 sir.
Yeah. In case of a wholly owned, will be more to a parent company. So how that will be good?
Can you repeat, sir, please?
In a wholly owned subsidiary will be more to its parent company. In that scenario, swap ratio is not required, I hope. Means it is only all the shares held by the parent company. So in that scenario, how treatment will be happen?
Yes, sir. In that case, you're absolutely right that in case of merger of wholly owned subsidiary with its parent company, sir, valuation report is not required. Then you are just required to take a certificate indicated that the means proposed merger is in between the wholly owned subsidiary and its parent company, and hence the swap ratio is not required. And we will annex the same in the application, and the same will be submitted to NCLT. Else, sir, you can do one more thing, which we used to follow while filing the application of parent company and wholly owned subsidiary, is that you can take a affidavit from the directors of both the applicant companies stating that since this merger is in between the parent company and wholly owned subsidiary, which is why valuation report is not applicable.
Okay.
And the shares would be allotted in ratio 1:1, sir. This is a general means procedure which is followed by all the registered valuers, and the same is being written in valuation rules as well.
Okay, but in case the share value is 1 lakh, means the paid up capital is 1 lakh, and here the parent company has 13 crore. So how that will be distributed?
Sir, then you will have to increase the authorized capital first.
No. Not in parent company, but in subsidiary company, wholly owned subsidiary company. only 1 lakh paid of capital is there. Only 10,000 shares into 10. So how it will be swapped to means 1:1 to the parent company?
Sir, your wholly owned subsidiary is getting merged in the parent company, right? And in the subsidiary company, you said there will, if suppose hypothetically that there are only 10,000 shares of nominal value of rupees 10, then the share capital would be of 1 lakh rupees, sir. So for one shares, it will get one share in the parent company. Means for one shares in the subsidiary company, the concerned shareholder will get one share in the parent company, sir.
Okay, but the shares are held by the parent company. It is a wholly owned subsidiary company.
Okay, understood, sir. So, sir, just for the means authorized representative part, means in wholly owned subsidiary also we are required to have two shareholders to means comply with the provisions of Companies Act. In that scenario, sir, only the second shareholder will get the shares in the parent company, cause sir, a company cannot hold shares in its own company.
Exactly. And one more thing, what about the accumulated loss in wholly owned subsidiary?
Sir, accumulated loss, actually, sir, accounts is not our domain. So
Okay.
we basically deal in the implementation of scheme part. So it would be better if you consult your chartered accountant in this respect, sir.
Okay, got your point.
Okay, sir. Thank you, sir.
Yeah.
Sir, does anyone else has any query?
Hello. Hello. Am I
Yes,
audible?
yes, sir. Yes, sir.
So I have recently received a merger, the second motion order on 9th of September. So the audit of the transferee company is yet pending. And my appointed date, which has been given in the order, is 1st of April 2021. So for 21-22, should I merge both the company's accounts or make it a standalone basis for the transferee company?
So for the transferee company, option is available with you, since means as far as ROC compliances are concerned, since means the due date for AGM has yet not triggered. So it depends on you that whether you want to firstly convene the AGM and prepare the standalone financials first and then the consolidated financials. Otherwise, but as far as income tax means compliances are concerned, you will have to file the standalone income tax return first. So anyhow, you will have to prepare the standalone financials as well. So, sir, for income tax compliances, you are required to do both, means preparation of standalone financials as well as consolidated financials. But as far as ROC compliances are concerned, sir, it depends on you. If you are means if you convene the AGM before 30th September of the transferee company, then you will have to prepare the standalone. And sir, you can also merge the financials and then you can prepare the consolidated financials in one go. But generally, sir, the companies used to prepare both standalone as well as consolidated.
Preparation of both is possible, but what should be filed with ROC? That is
so
my
the
query.
Consolidated financials, sir. For as far as transferee companies concerned, sir, the consolidated financials now will be filed. Because as you said, your appointed date is in the last year, is of 1st April 21.
Yes, but I have received my final order on 9th of September. So if my audit date is before 9th of September, there is no order at all for merger. So if the audit has been done before that, the notice of AGM has been issued before that for 30th of September, then it has to be
as I said, that if
standalone.
the AGM compliances are already begin with, then you will have to file the standalone financials, sir.
There is no issue in that.
Yes, sir. Obviously, there is no issue in that, sir.
Okay. Thank you.
Okay, thank you. We have received one query in the chat box. It is, what is the applicability of fast track merger? So Saif and Surabhi, any one of you would like to answer this query?
Yes, ma'am. The fast track merger is applicable in case of a small company as defined in the Companies Act, or merger of a wholly owned subsidiary in a parent company. And there is one more question, ma'am. Generally, how much period will be sufficient to approve merger?
Generally, it takes 6 to 7 months to approve merger, but it can extend. It can vary because of the regulatory authorities or any type of holidays in NCLT, if any.
Hi, Surabhi. Am I audible?
Yes, ma'am.
I do have a query. Suppose if any compliance is pending on part of the transferor company, inadvertently, if the transferor company has missed some of the compliances and it comes to the knowledge of the NCLT while appearing or while sanctioning the scheme of merger, then how it will be dealt? I mean, do we need to comply, the transfer company is required to comply with that compliance, or how we will go about that?
Ma'am, at first means if it is before the final order, then the transfer company can comply with it. And if it is after the final order and the compliance is the NCLT have acknowledged the compliance after the final order, then the transferee company can file for the transfer company on behalf of the transfer company.
Okay, thank you, Surabhi.
Thank you, ma'am.
I believe Saif and Surabhi has already answered to all the queries. Thank you, Saif. Thank you, Surabhi, for this comprehensive session. It was very enlightening and enriching. We all have learned a lot. Thank you so very much.
Thank you, ma'am.
Thank you so much, ma'am.
Thank you. Look forward to more sessions from you and in near future. Okay. Thank you. Thank you. Okay. Bye. Bye, everyone.